Welcome to Pindar Poetry. We hope you learned something new.
In this video, I will compare QuickBooks bills versus expenses. We'll dive into the fundamental distinctions between these two transaction types, helping you understand exactly when to use each one. Getting this right is crucial for maintaining accurate financial records and generating reliable reports. By the end, you'll be able to confidently categorize your business transactions, ensuring your books are always in order and your financial insights are precise. You should use a bill in QuickBooks when you receive goods or services but haven't paid for them yet. Think of it as buying something on credit from a vendor. Recording a bill creates an accounts payable entry, clearly showing how much your business owes and to whom. This is essential for managing your cash flow effectively and ensuring you pay your vendors on time, avoiding late fees. Conversely, an expense in QuickBooks is used for purchases you pay for immediately. This typically happens when you use a debit card, write a check, or pay with cash directly from your bank account. Recording an expense instantly reduces your bank balance or increases your credit card liability. It's the straightforward choice for transactions where the payment and the purchase occur simultaneously, simplifying your record keeping. The main difference boils down to timing. Bills are for purchases you'll pay later, while expenses are for purchases paid right away. Bills create a liability, showing what you owe, whereas expenses directly impact your cash or credit card balance. Understanding this distinction is vital for accurate financial reporting and managing your business's financial health. Also, for those looking to simplify their daily routine, check the description for a link to some fantastic leak-proof meal prep containers and other great deals.
Thanks for watching. Consider subscribing if we helped you.